Imagine an iceberg floating in the ocean. You only see the tip, a small fraction of its total mass. The rest, a vast hidden structure, lurks beneath the surface. This is a powerful analogy for the economy. There's the legal, regulated part we easily observe. It's the world of salaries, taxed goods, and corporate profits. But beneath this visible tip lies a massive submerged entity, the underground economy. This shadow economy operates outside official records and government oversight. It encompasses various activities, some illegal, some merely unrecorded. It's a realm of untaxed income, black market transactions, and informal exchanges. Understanding this hidden economy is crucial. It impacts government revenue, economic stability, and social equality. This essay delves into the depths of this iceberg phenomenon. We'll explore both the visible tip and the submerged behemoth of the underground economy. We'll examine its implications for tax authorities and society at large. Finally, we'll consider solutions to address the challenges posed by this hidden economic force. The visible economy represents the tip of our iceberg. It's the economic activity that's recorded, regulated, and taxed by governments. This includes everything from the salaries we earn at our jobs to the taxes we pay on the goods we buy. It's the economy of official records, transparent transactions, and government oversight. Imagine walking down a bustling city street. You see businesses paying taxes on their profits, individuals paying income tax on their earnings, and consumers paying sales tax on their purchases. These are all examples of the visible economy in action. This formal economy is the foundation of government revenue. Taxes collected from this sector fund public services like healthcare, education, and infrastructure. The visible economy is the economic engine we know and understand, but it's only part of the story. To grasp the full picture, we need to dive deeper into the murky depths of the submerged economy. Wages and salaries form a significant part of the visible economy. They are the lifeblood of many households, providing the means to purchase goods and services, pay for housing, and save for the future. This regular income is what keeps the wheels of the economy turning, ensuring that money flows through various sectors and stimulates economic activity. Every month, millions of employees receive paychecks from their employers. These paychecks are not just numbers on a piece of paper or a screen. They represent the hard work and dedication of individuals. They are a testament to the value that employees bring to their organizations and the economy at large. These earnings are subject to income tax, a crucial source of revenue for governments worldwide. Income tax helps fund essential public services such as healthcare, education, and infrastructure. Without this revenue, governments would struggle to provide the services that citizens rely on every day. This system of taxation relies on transparency and compliance. Employers are required to accurately report earnings and withhold the correct amount of tax from employee paychecks. This ensures that the tax system functions smoothly and that everyone pays their fair share. Employers deduct taxes from employee paychecks and remit them to the government. This process, known as withholding, simplifies tax compliance for employees and ensures a steady stream of revenue for the government throughout the year. This ensures that individuals contribute their fair share to the collective good. The taxes collected are used to build and maintain public infrastructure, support social programs, and ensure the overall well-being of society. This system, however, has its limitations. Not everyone is part of the formal economy, and not all income is reported or taxed. This creates challenges for tax authorities and can lead to disparities in tax burdens. Not all employment is formalized. Many people work in the informal sector, where jobs are often temporary, unregulated, and lack formal contracts. These workers do not receive regular paychecks, and their earnings are not always subject to income tax. The informal sector, characterized by casual work arrangements and lack of documentation, often operates outside this tax net. This means that a significant portion of economic activity goes untaxed, which can limit government revenue and affect the provision of public services. This is where the line between the visible and hidden economies begins to blur. The informal sector, while vital for many people's livelihoods, presents challenges for economic policy and tax collection. Despite the challenges posed by the informal sector, wages and salaries remain a cornerstone of the visible economy. They provide stability and predictability for workers and their families, and they are a key driver of economic growth. They represent the income generated by a significant portion of the workforce and contribute significantly to government coffers through income tax revenue. This revenue is essential for funding public services and infrastructure projects that benefit everyone. Understanding this element of the visible economy is essential for comprehending the broader economic landscape. By recognizing the importance of wages and salaries, we can better appreciate the complex interplay between work, income, and economic growth. Section 4. Corporate profits and property taxes. Pillars of the formal sector. Corporations, the engines of the modern economy, also play a vital role in the visible economy. These entities, ranging from small businesses to multinational giants, drive innovation, create jobs, and generate significant economic activity. Their influence extends beyond mere profit-making. They shape the very fabric of our economic landscape. Their profits are subject to corporate income tax, a key source of government revenue. This tax is not just a financial obligation, but a contribution to the societal infrastructure that supports their operations. The revenue collected from corporate taxes funds public services and projects that benefit the community at large. Similarly, property taxes levied on land and buildings provide a steady stream of income for local governments. These taxes are crucial for maintaining and developing public infrastructure, ensuring that communities have the resources they need to thrive. From urban centres to rural areas, property taxes play a pivotal role in local governance. These taxes fund essential services such as schools, roads, and emergency services. Without this revenue, many of the public services we take for granted would be underfunded or non-existent. Schools rely on property taxes to provide quality education, roads need constant maintenance and improvement, and emergency services require funding to respond effectively to crises. These tax mechanisms are designed to ensure that businesses and property owners contribute to the public good. By paying their fair share, they help create a balanced and equitable society where resources are allocated to benefit all members of the community. However, the complex world of corporate finance presents challenges. Navigating the intricate web of tax laws and regulations requires expertise and diligence. Accountants and financial advisors play a crucial role in ensuring compliance and optimizing tax strategies. Tax havens and intricate accounting practices can obscure profits and minimize tax liabilities. These strategies, while legal, often spark debates about fairness and transparency in the tax system. The use of offshore accounts and complex financial instruments can make it difficult for governments to collect the taxes owed. Despite these challenges, corporate profits and property taxes remain essential pillars of the visible economy. They provide the financial foundation upon which public services and infrastructure are built. Without these contributions, the quality of life in our communities would be significantly diminished. They represent the contribution of the business sector and property owners to the overall tax base. This partnership between the private and public sectors is vital for sustainable economic growth and development. Understanding these elements is crucial for grasping the dynamics of the formal economy. By recognizing the importance of corporate profits and property taxes, we can better appreciate the interconnectedness of various economic components. As we delve deeper into the iceberg, we'll see how these formal structures contrast with the often murky operations of the underground economy. This exploration will reveal the complexities and nuances of our economic systems, highlighting the importance of transparency and accountability. Section 5. Sales taxes capturing consumption in the formal economy. Sales taxes levied on goods and services at the point of purchase offer another window into the visible economy. These taxes are applied to a wide range of products and services, from everyday essentials like groceries to luxury items such as high-end electronics. Every time we buy groceries, clothing, or electronics, we contribute to this revenue stream. This process is seamless for the consumer, who often doesn't realize the significant role they play in the broader economic system through these small everyday transactions. These taxes, often a significant source of funding for state and local governments, are directly tied to consumer spending. They help finance public services such as education, healthcare, and infrastructure, which are essential for the well-being of society. The efficiency of sales tax collection depends on the formalization of retail businesses. When businesses are registered and compliant with tax regulations, it ensures that the taxes collected from consumers are properly remitted to the government. Registered businesses collect and remit these taxes, ensuring a transparent flow of revenue to the government. This transparency is crucial for maintaining public trust and ensuring that the funds are used effectively for public services. However, the rise of e-commerce and cross-border transactions presents new challenges for tax authorities aiming to capture consumption in the digital age. Online shopping has grown exponentially, and with it, the complexity of tracking and taxing these transactions. Despite these challenges, sales taxes remain a vital component of the visible economy. They are a reliable source of revenue that helps governments plan and budget for future expenditures. They provide valuable insights into consumer spending patterns and contribute significantly to government coffers. By analyzing sales tax data, economists can gauge the health of the economy and predict future trends. Understanding this aspect of the formal economy is crucial for comprehending the complex interplay between consumption, taxation, and government revenue. It highlights the importance of consumer behavior in shaping economic policies and funding public services. As we'll see in the following sections, the hidden economy often operates outside this formalized system, posing unique challenges for tax collection and economic analysis. This shadow economy can undermine the effectiveness of tax policies and reduce the funds available for public services.